In this video, I'm going to showcase a new indicator on TradingView that you can use for sentiment analysis. So if you want to know when to buy or sell a particular trading asset, then this indicator is going to be the one that you've been looking for. To add this indicator to your chart, you want to go to TradingView and then open Indicators Search tab. And then here you want to type in the name of this indicator, which is Market Sentiment, Fear and Greed. And it's going to be this one by Algo Alpha. Now, this indicator can be used on any trading security that you like, as well as on any time frame. For me, I'm going to be using it on the 15-minute time frame of GBP EJPY. So here is our indicator. As you can see, it consists of just a few key components. First, we have the histogram, which changes color between red and green. According to the creator of this indicator, red histogram bars represent bearish trend impulses, while green bars indicate bullish trend impulses. Now, this gray line is known as the sentiment threshold. Whenever the sentiment histogram crosses this threshold, it signals a trend impulse. Additionally, we have these white dots, which represent neutral market sentiment. Now, you may be wondering, if these dots represent neutral sentiment, how do we identify bullish or bearish market sentiment? Well, that's where the histogram comes into play. A red histogram bar like this one indicates bearish market sentiment, while green histogram indicates bullish market sentiment. This indicator also includes a sentiment gauge, which can be used to assess the level of greed or fear in the market. Remember, fear corresponds to bearishness, and greed corresponds to bullishness. Whenever the arrow on the gauge is near the top, it indicates increased greed in the market, suggesting that people are buying specific assets, which can push prices higher. Conversely, whenever the arrow drops towards the bottom, it indicates increased fear in the market, meaning people are selling off specific assets, which may cause the price to go down. Now let's take a look at the settings of this indicator and see how customizable it can be. The look-back window is the main length of this indicator, and it's used to calculate the sentiment metrics. If you want to visualize sentiment over longer periods, you can increase this number. For my settings, I'm going to use a look-back window of 34. The trend breakout threshold is a standard deviation multiplier that helps identify trend impulses. A smaller value gives faster signals but with more noise. To maintain a balance of both, I'm going to stick with the default setting. Now, the gauge resolution controls the size of the sentiment gauge. I'll increase this to 20 to make it a bit larger. Next, we have the indicator mode, where you can toggle between sentiment true and sentiment normalized. For this video, I'm going to change this to sentiment normalized, and as you can see, this is how this indicator is going to look like. And then here, we can also customize the bullish and bearish colors, but I'm going to leave these as they are. But feel free to experiment with the settings as well as the Style tab to adjust this indicator to suit your needs. Once you've made your adjustments, click OK. Now, at this point in time, I know you may be thinking, but how can we use this indicator to trade? Well, there are several methods, and the first one involves using it for sentiment analysis. As mentioned earlier, green histogram bars represent bullish sentiment, and red histogram bars represent bearish sentiment. Now, if we add an additional indicator, such as the Pine Trades Market Beacon, which as you can see here, it will print buy and sell signals directly on your chart. To execute a long trade, you'll want to ensure that a buy signal is printed in an area where the sentiment histogram is green, indicating bullish market sentiment, and then you take your long position. Now, for a short position, you want to look for a short signal in an area where the sentiment histogram is red, indicating a bearish sentiment. Once this happens, you take a short position. Now, this approach of trading can be profitable even on its own, but you can enhance it even further by incorporating some price action concepts such as breaks and retests to achieve greater profitability. Now, the second method of using this indicator is to trade reversals based on market overextensions. Let me show you. This indicator has a red upper threshold and a green lower threshold. Whenever this histogram touches the upper threshold, that could indicate that the market may be overbought. Whenever this happens, price tends to come back down. As you can see, that is exactly what happened right here, although this might have been due to news. After the news passed, you can see that the red histogram went all the way down and touched the green lower threshold. Several histogram bars later, you can see that one histogram bar did not touch the lower threshold. So this indicates the end of this overextension to the downside. Once that happened, taking a long position here would indicate that you took this position right after the market was overextended as a result of this news candle. And as you can see, that trade would have been profitable. Keep in mind that not all overextension entries are going to be profitable. There could be instances, like here, where the green histogram touched the upper threshold and the price kept going up. After some time, this was the first histogram bar to close under the upper threshold, which could be a signal for taking a short position. If we were to take a short position here, this trade was also profitable. I thought it would actually be a losing trade, but the point remains, not every single overextension entry is going to result in a profitable trade. So you have to combine this with other indicators or price action concepts to get long-term profitability. Now, the last method of trading with this indicator is using it as a divergence indicator. But what is a divergence, you may be thinking? Well, a divergence occurs when the price action is doing the opposite of what a particular oscillator is doing. For example, here we had a bullish divergence. How do we know it was a bullish divergence? Well, it's because, as you can see, the price established a swing low right here and another low right here. And if we look at this second low, it was actually lower than the previous low, which indicates that this bearish trend may continue going down. But looking at this histogram, you can see that from this low point to the second low point, this oscillator actually created a higher low. As you can see, each histogram bar was closing higher than the previous one. So there was a discrepancy between the lows of the price and the lows of this oscillator. This, ladies and gentlemen, is a bullish divergence. The way you would trade after this divergence is you just wait for this histogram to print a green bar to indicate the presence of a bullish sentiment in the market. And that happened here on this candle, which means this is going to be our entry. If we were to take a long trade here, put the stop loss right under the most recent swing low with a risk-reward ratio of 1 to 1.5, you can actually see that that trade would have been profitable. Ladies and gentlemen, this is the market sentiment fear and greed indicator. You can use it to identify fear and greed or bullish and bearish sentiment in the market to complement your trading style. Go ahead and play around with it and see what strategies you can come up with to make use of this awesome indicator. If you find a way to use it, let us know in the comments section below. Well, that's basically everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.